If you are a Canadian parent paying for childcare, you need to understand how these expenses are treated for tax purposes. The rules are different depending on where you live. Today, we're breaking down how childcare expenses work under the federal tax system and how they significantly differ in Quebec. For many parents, not knowing these rules means leaving money on the table. Let's make sure you get the maximum benefit you're entitled to. It's important to remember that the federal and Quebec rules are not the same. If you live in Quebec, you have two sets of rules to consider. We'll start with the federal system, which is administered by the Canada Revenue Agency, or the CRA. Under federal tax rules, you won't automatically receive an official T-slip for childcare expenses. Instead, you need a receipt directly from your childcare provider to claim the deduction. Here's a crucial point. Generally, the lower-income spouse must claim the childcare deduction. This is designed to reduce the taxable income for the spouse who earns less. To be eligible for the deduction, the expense must be incurred to allow the parent to work, be self-employed, or attend school full-time. Now, let's look at the Quebec system, which is managed by Revenu Québec, and where the rules change significantly. Quebec handles childcare expenses in a fundamentally different way than the federal government. Instead of a deduction, Quebec offers a refundable tax credit. Instead of a T-slip, you will receive a mandatory RL24 slip from your childcare provider. A key difference is that either parent can claim the Quebec tax credit. There is no strict rule requiring the lower-income spouse to claim it, unlike the federal system. Eligibility is also broader in Quebec. For example, you may qualify even if you are actively seeking employment, not just when you are employed or in full-time school. One of the most powerful features in Quebec is the option to receive your childcare tax credit in advance. Instead of waiting until you file your tax return, Quebec families can apply to receive their refundable tax credit in advance, either monthly or quarterly. If you receive advance payments, Revenu Québec will issue an RL19 slip showing the total amount already paid. This must be reported on your tax return to reconcile the credit properly. Let's quickly summarize the key differences between the federal and Quebec systems. Federally, it's a deduction, generally claimed by the lower-income spouse, and requires the parent to be working or in full-time school. In Quebec, it's a refundable tax credit that either parent can claim, with broader eligibility and the significant benefit of receiving advance payments during the year. Understanding these differences is crucial for effective tax planning. Tax planning is more than just filing your forms. It's about knowing the system to maximize your family's financial position and impact your refund or tax payable. If you found this breakdown helpful, subscribe for more practical Canadian tax insights.